Welcome to XFO Intelligence Podcast, the Legendary Investors Series. Today, we're diving deep into something extraordinary, the Jim Rogers success formula, reverse-engineered for the first time. At XFO Intelligence, we don't just study successful investors. We re-engineered the formula behind the legendary investor, Jim Rogers. What you're about to hear isn't just another investment story. It's a blueprint that can be replicated. After exhaustive analysis of Rogers' career, philosophy, and methodology, we've distilled his extraordinary success into what we call the core algorithm, RPAC: research, pattern recognition, action, conviction. This recursive loop forms the engine of his success, where each element feeds into the next in a self-reinforcing cycle. Let's start with Phase 1, research, the foundation. Rogers doesn't just read reports. His research inputs include historical economic data spanning 20-plus-year cycles, geopolitical shifts, demographic trends, but here's the key: physical observation through travel and direct conversations with producers, consumers, and locals on the ground. His research process follows three critical steps: multi-time frame analysis, studying the same problem through daily, yearly, and decadal lenses; ground truth verification, never trusting data you haven't physically verified; and cross-referential checking, correlating academic research with street-level observation. Phase 2, pattern recognition, the insight generator. Rogers identifies four key patterns that repeat throughout history. The debt cycle pattern. Excessive debt always resolves through inflation or default. The commodity cycle pattern. 15 to 20-year boom-bust cycles driven by capital investment cycles. The geopolitical shift pattern. Economic dominance shifts every century from UK to US to Asia. And the crowd psychology pattern. Maximum financial opportunity exists at points of maximum consensus error. His recognition process maps current situations against historical precedents, identifies divergences between perception and physical reality, and locates asymmetric risk-reward opportunities with low risk and high potential return. Phase 3, action, the implementation. Rogers follows the principle of concentration over diversification. As he says, put all your eggs in one basket and watch that basket. He practices contrarian positioning, buying when there's blood in the streets, selling during euphoria. He prefers physical positioning, owning the actual commodity or asset, not paper claims. And he uses geographic arbitrage, positioning assets and even personal life in rising economic zones. His execution rules are simple but powerful. Only act when research and pattern recognition align. Size positions according to conviction level. Use others' emotional extremes as contrarian indicators. Phase 4, conviction, the psychological foundation. This is where Rogers separates himself from ordinary investors. His mental framework includes time arbitrage, willingness to be early, understanding that being early feels identical to being wrong; emotional independence, freedom from needing social validation for decisions; historical perspective, recognizing that this time is never different in fundamental human and economic patterns; and freedom orientation, viewing wealth as means to independence, not an end in itself. The success formula in practice works like a decision tree. If historical pattern exists, and ground verification confirms thesis, and market perception diverges from reality, and asymmetric risk-reward is present, then act with conviction. Else, wait and continue research. But what makes this formula truly work is the underlying psychological operating system. Rogers operates with what we call the sovereignty mindset, valuing freedom above approval, making decisions for your future self, not your present social circle, cultivating comfort with solitude and independent thought. He maintains a reality-based worldview, trusting what you see over what you're told, updating beliefs when evidence contradicts theory, maintaining skepticism toward authority and consensus. And crucially, he thinks with a multi-generational perspective, thinking in terms of legacy, not quarterly returns, positioning yourself and family for coming shifts, not current conditions, studying what lasts centuries, not what trends this year. Here's what's fascinating about Rogers. He doesn't separate life from investing. His success formula integrates everything. He lives where he invests, moving to Singapore based on his Asian century thesis. He educates his children according to future global reality. His daughters learned Mandarin. He structures his entire life around freedom and mobility. His continuous learning engine uses travel as education, teaching as learning reinforcement, and constant historical study for pattern recognition. Equally important is the anti-formula, what Rogers systematically avoids. No diversification for its own sake. No following Wall Street trends or recommendations. No short-term trading or market timing. No investment in anything he doesn't thoroughly understand. No reliance on second-hand information. The replicable framework comes down to 7 key principles. Develop deep expertise in a few areas rather than superficial knowledge in many. Cultivate independent information sources beyond mainstream media. Build conviction through direct experience rather than abstract analysis. Practice contrarian thinking as a discipline, not just a preference. Structure your life around your convictions rather than keeping them compartmentalized. Think in multiple time horizons simultaneously. Maintain liquid patience, hold cash until exceptional opportunities appear. But here's the ultimate success principle that XFO Intelligence has identified. Rogers understands that financial markets are psychological and historical phenomena first, and mathematical phenomena second. Most investors study finance and economics. Rogers studied history, psychology, and traveled to understand ground reality. This reverse-engineered blueprint reveals that Rogers' true genius lies not in predicting markets, but in constructing a personal operating system that automatically identifies opportunities while protecting against common psychological pitfalls. The system is the success, and the investments are merely its output. If this breakdown provided value to your investment thinking, please like this episode, share it with fellow investors, and subscribe to XFO Intelligence Podcast for more legendary investor breakdowns. Remember, this content is for educational and informational purposes only and should not be considered personalized investment advice. Always consult with qualified financial professionals before making investment decisions. Past performance does not guarantee future results, and all investments carry risk.